It's Equity News on Equity Access, your cross-section of the stock markets and of developments in the Zimbabwean economy. A fantastic evening it is to you. Thank you for joining us as we broadcast from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get started. President Mnangagwa launches the Tripartite Negotiating Forum, which brings together government, business, as well as labor unions. The forum is meant to craft a social contract, and key to the forum are issues to do with salaries for workers in the face of escalating inflation. Grain Marketing Board says it expects to harvest 700,000 metric tons of maize in the 2019 harvesting season. National demand is at over 1.5 million metric tons. The deficit will be partly supplemented by imports from Tanzania to the volume of 700,000 metric tons. This comes after President Magufuli's visit to Zimbabwe last week. Padenga is confident of reaching its 2019 targets despite harsh macroeconomic setup. 4,200 crocodiles have been harvested since the commencement of the harvesting season in March. This is according to trading update issued by the Chief Executive, Mr. Gary Sharp, during an annual general meeting held in the capital earlier today. 2,120 schemes have been graded with 87% success. The corporation is looking to commission a new solar power plant, which has just actually been completed. The first one was completed as well as commissioned in the first half of the year. Also, by the end of the year, they should have commissioned a third solar plant, bringing their total capacity to 1.2 megawatts of power. Now, let's just get into the stats to look at how Padenga has performed over the past few years before we actually get into the footage straight from that annual general meeting. So this would be the revenue performance right at the top. Then at the bottom here would be the profit after tax in that particular order. 2014 revenue of $28 million, 2016 revenue of $31.3 million, dipping in 2017, then scaling in 2018 to $42.5 million. Profit after tax also following a similar trajectory. In 2014, PAT of $6.5 million, 2016, $8.4 million, then 2018, $12.7 million. Our Equity Access team was on the ground. Let's have a look.
We commissioned the first 330 kilowatt peak phase of the solar array in Kariba last week, and this is now feeding into the national grid to offset the electricity the operation uses on a daily basis. An additional 470 kilowatt peak solar array is complete in terms of construction, and we are moving rapidly to commission that and to also add that into the direct feed into the national grid. A final 400 kilowatt peak extension to that array to bring the total to a 1.2 megawatt installation will commence shortly for completion by the end of the year. This not only achieves a reduction in energy overheads, but it reinforces the company's commitment to sustainability through the application of alternative and renewable energy solutions, and obviously in the light of the diminished national supply, allows us to offset the costs of additional supplementary generation like generator supplementation. From a financial perspective, the first half of the financial year is largely a cost accumulation period, with a great portion of harvesting and turnover accruing in the second half of the year. Total expenses for the 5 months to May are in line with budget in US dollar values. On a market perspective, demand for defect-free skins remains steady and prices are anticipated to hold as long as the quality expectations of the premium market are satisfied for both the species that we produce. There is an increased expectation from end consumers regarding good husbandry practices, adherence to animal welfare norms, and a demonstrated commitment to ethical production systems and sustainability compliance. We have committed resources towards meeting these expectations and positioning the business to maintain its market share, notwithstanding these significant obligations.
In other news, CBZ Holdings Chief Executive Blessing Mnangagwa issued a trading update on the performance of the firm at an annual general meeting also held in the capital this afternoon. According to the trading update, which spans for the 4 months of the year, the number of accounts have increased 11%, number of transactions declining, however, total deposits scaling by 2%. Value of transactions in nominal terms have also scaled. Our team was on the ground. Let's have a look.
Performance cost to income ratio gone down 14%. Capital adequacy ratio, we are very well capitalized at 29.4%, especially when you then consider that the bank is still quite a significant share of the portfolio. I think regulatory capital is somewhere around 12%, right? So that means we are very well capitalized.
Now, beyond our border, Zambia and Tanzania to build an oil pipeline worth $1.2 billion. This concludes our evening news bulletin. Up next is a look at the news. Don't go away.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Alesi Chumbumu, and joining me here today is Respect Gwenzi, our Chief Analyst. Respect, how are you doing today?
I'm doing just fine. Thank you, Alison.
I'm fine, thank you. If we just move in quickly onto the stock markets today, we do see that the top 10 index did take a knock there. I think it was majorly because of Padenga's drop today of about 9.35%. But overall, the market did go up. All share index and the industrials index mimicked each other, coming up 0.24%. For the all share index to settle at 190.21 points, while the industrials index was settled at 635.51 points. The mining's index is also up to 229.36 points after adding 0.17%. So Padenga has about 3% of the market share within the stock exchange.
Yeah, it's market cap. It's about 3% of the total market capitalization of the Zimbabwe Stock Exchange. But I think my take on this whole the way the market played out today is such that there's still momentum for growth. We're still seeing the market overall going up. And of course, the top 10 was weighed by Padenga losses. But trying to zoom in on Padenga today, they held an EGM in Harare, and they highlighted that they are actually in line with achieving their targeted produce as well as sales for the year. The first half, of course, is a cost accumulation period. So for the 5 months period, they're doing well, both from their Zim operation as well as their US operation. But I think there's one key specific factor which might have influenced price today. They had hoped to seal a deal with regards to their acquisition of what they previously communicated to be a local business which is into trading of in foreign markets. So I think that deal has not yet consummated, and that's one of the reasons why possibly the market discounted the counter's share price today on the Zimbabwe stock market. But overall, this is a company which is performing good, but it has accumulated significantly. Just under 5 months, it's up over 100%, and it's been a counter which has enjoyed much in a time where people are accumulating stocks that have got exposure in foreign markets and in terms of any foreign exchange. So today's announcement that the deal has not yet been consummated, obviously it held back some investors who possibly chose to forego a bit in terms of their share price. But I think we also saw the biggest counter on the market knocking off a bit after yesterday's recovery. So I think there might be a bit of still profit taking in some of the counters, but generally there's still a clear momentum of upwards gaining. Citco International recovering from yesterday's loss, going up 6.79, and Old Mutual marginally recovering after yesterday's loss. We saw it losing on both on the JSE and also on the Zimbabwe Stock Exchange, 1% on the ZSE, so that's just quite a marginal recovery. But this is all in all 6 counters out of the 10 top counters on the Zimbabwe Stock Exchange trading in the positive. And I also think the market in general still have got that pressure to still go up, which is in line with interbank developments.
Yes, I think I agree with you. It's because much of the movement is to do with your mid-tier to low-tier counters. Just a quick rundown: 5-day trend. All share index is still down 0.47%. Mining's index is now up 3.75. Top 10 index is down 2.28%, while the industrial index is down 0.53%. Now, a representation of what we just mentioned about mid-tier to low-tier counters actually driving the stock exchange. I mean, we've got both Dawn and Willdale leading a pack of about 15 bulls today versus a pack of 5 bears, which did come off. Now, Dawn and Willdale have shown some good gains in the past couple of sessions. Dawn hasn't been as consistent as Willdale, but Willdale maybe on every second to third day it is coming up, and today it is at an impressive 4.2.
Dawn, I think we're just coming from doing the research note on Dawn's latest results to December. It's a counter which obviously enjoys the boom in tourism. I mean, the full year financials to December 2018 showed that the top line grew against a growth in tourism, which of course, since they're a counter that has got its properties which are leased out to African Sun, they enjoyed the boom in hospitality, which also draws from the growth in tourism. So generally the trend has been fine, but I think there's also the dynamic of they also brought in a new line, which is sale of properties, and this managed to generate them about $4.4 million in terms of property sales at one of their Marlborough developments. I think 34 houses were sold, and outstanding 19 are still there to be sold.
It's a new market for them, I understand.
Yes, it's a new market. Of course, they once did something a few years ago, but it wasn't as consistent as they are doing now. So I think this is one of the things that has propped up their top line as well. If you look at the amount that they generated from rentals, it's about 4 million, coming from just about 4.1, coming from about 2.4. That's a huge growth as well. Yes. And they also earned some good back out of other services which are outside of rentals and state sales. So they really stand in a position where they're likely to keep on enjoying and obviously running on the back of the strong demand in Zim tourism, which of course African Sun is the biggest player in that market, has been able to tame and enjoy from. So I think there's still room for growth. They've bought new land, some land in Victoria Falls. They've also bought about 2,300 hectares in Wange, and they still have got tracts of land in Harare as well, which should be utilized for development of properties, both for sales and for rental purposes. So I think this is a counter which is showing growth potential, and I think it's deserved for the counter to have received this 20% increase. We covered in our research note that we still see sustained momentum in terms of income from sales of properties within Dawn Properties. Within Dawn Properties stable. So I think I definitely aim for accumulation of the share price. Willdale, it's a counter which has been rising over the past few sessions. In fact, if not weeks, it's just traded at 3.8 2 days ago, I think on Monday, and last week it was trading at about 2.5 thereabout, coming from a low of about 1.8 and 0.8 just a few years back. I don't really seem to see why there has been this momentum in the counter. I mean, besides that, people are accumulating stocks for the sake of running away from other TGS dollars. But this is a counter which has exhibited, I mean, it's been struggling its operations have not been as firm. In terms of number of bricks sold, they've been growing in terms of volumes, but it has been erratic. Their operation has not been able to really push out as much in terms of their capacity. So I think it's one of the drawbacks. But they managed to sell part of their land last year, and part of that money is used to extinguish debt, which should obviously push up their earnings because they're no longer paying a lot of interest expense. So I think that's one of the positives. But generally, they've been suffering from competition from Beta Bricks. I think they're now one of the, in fact, if not the leading guys on the market. So it remains to be seen why there's been that huge jump in the counter. PPC, the PA Lafarge today released a trading update, volumes up 7% on a 4 months to April basis, and I think that also shows a bit of volumes recovery. But this has got something unique. I mean, this has got something similar to what we had from Dairy Board a few days ago. Volumes also going up about 8% year on year, and I think if you look at other counters as well, CBZ volumes growth, they were talking of several billions in terms of transactions against the same period last year, slightly up. So I think there's still some residual demand that we're still seeing in the market, and companies are still obviously benefiting from that.
Okay. Like you mentioned, CBZ did enjoy some volumes growth there. It did also come up 14.13% on its share value to about 46.92 cents. Citgo International, we've already touched on that. Padenga is down 9.35%. They did mention that most of their production numbers are very much intact. Even their costs, according to budgets, they are very much also intact and within target. Now, Ternal is supposed to hold an AGM tomorrow. They came off 0.77%, while OK did mention that most of their growth in terms of revenues today during the analyst briefing was a result of inflation. Now, their volumes only grew by 1%.
Yes.
I mean, they may find it to be very modest, but it could be very worrying in my perspective, because we are going into a time and space
Yes.
where demand is very much going to be much more constrained than
Yes.
they experienced within that financial period.
Yes, I think I definitely agree with you.
Mm-hmm.
2018 was mainly a year where any one of the retailers could have reaped much. Of course, not in terms of just prices, but if you see the way at which, I mean, the levels at which people were buying product, especially in the last quarter of the year, it was really phenomenal. It was something that has never been seen. When you really look at that aspect of volume, it's really critical. Why? Because 2018 was really that much of an exceptional year in terms of demand. I think aggregate demand in the economy was really at its highest in post-dollarization period. Obviously, coming from induced by the growth in agriculture, mining, and of course money supply, which were obviously skyrocketed to the highest point, and most of the retailers actually ripped off some, I mean, from that. But OK just grew its volumes by what you're saying, just 1%.
And I think it's still very much worrying, because if I'm not mistaken, in that financial year, did they not increase in terms of their floor space?
They actually did increase floor space. I don't think this is really much of a function of having constrained space. I think it's much of a function of increased competition. When you look at the way that they mentioned that there's been increased competition, especially from players like SPAR. SPAR has been re-strategizing. They've come back to the market stronger, and they're pushing, especially in the premium to mid-end. And right at the bottom there, you see retailer, wholesale retailers, Gains Cash and Carry, and some other Richards, and you mentioned, I mean, there are some other players as well in that space. So they've been coming hard and hitting hard, and of course it meant OK had to lose a bit of market share. In fact, they really lost some market share. Of course, the growth in terms of profitability, that's much to do with inflation. So it remains to be seen whether they hold ground in a period or in a year where aggregate demand is supposed to come off sharply.
Okay, just to add on, as we are just about to move on to RTG and Econet, I think also, even though they did mention that they received about $800 million worth of revenue, I think that revenue mix will change. One, because of how the demand is shifting from a wider space of a basket to a much more thinner and very basic basket, meaning that most of their premium products that they do sell that are on the shelves are going to be less preferred because of how salaries are going. Inflation is actually is very much attacking on those products. So maybe also their revenues are going to come off, not only because of a volumes decline, but
because
then
of the margins shifting in the matrix of their product.
Of their sales. Yes,
yeah,
exactly.
I do get it.
Okay, just moving on to RTG. RTG is at 8.49 cents after shedding 0.12%, and Econet is down 0.03% at 174.48.
Yeah, I think RTG has been going up over the past sessions.
Mm-hmm.
Obviously, it has obviously enjoyed a good run coming from a good financial year.
Mm-hmm.
One of the dents in terms of their performance, I think their dividend was not as deserved in USD. The cash flow position did not warrant payment of that dividend in USD. But obviously, I think it's just profit taking which is coming into play, and Econet, it really enjoyed a very good run over the past few sessions, and that of course as well might also be profit taking.
All right, let's just have a small talk on our forex market now. The payroll market is up at 8.1 with some high rates coming up to about 8.4 there, and also as low as about 7.9. 8 thereabout, with some who are very generous. Old Mutual implied rate is now closing in on the 10 mark, where it settled at 9.91, while the interbank rate is now at 5.59, come 5.6. Now, the matrix within the interbank market right now, it seems as if it is not moving at the pace that it should or would have moved if volumes were in check. I would like to presume, because in the past 3 sessions it's only come up about 1.4, 1.5 and 1.7%, and today it was only up just under 1% to 5.59 from 5.51. What do you think? Could Delta's statement be a sure statement? Are they going to enjoy a sustainable run?
That's quite a good observation. If you look at how the interbank is so far played out, the gains have been limited and they have been capped as well, largely due to RBZ's on 0.2 cap, which is sitting on a respective day. But lately, the kind of gains have not even gone up. Like today, it's just about 0.4, which is far much below the 2 point. So I think that's really a worrying trend. Why? Because it speaks as well to unavailability of forex. So as long as I think it really reflects to sellers not coming on board at all. Okay. And the little liquidity that is available on the market only being the little liquidity that's being on market only sold at below equilibrium levels. So I don't really feel that there's solid money on the market. Okay, which is also a big player, came and they explained that they've not really got some substantial amounts on the interbank. Of course, Delta has said so, but this is just 2 weeks of trading, and you also know that there's a 500 million which is being drawn down, and I don't also feel that that's quite sustainable as well. We have to wait. We have to see over a month or two how much flows start to move, and we can then safely say there is stability on the interbank, which can guarantee companies to foster and actually peg their future, the rates at which they could trade in future terms. So presently, I think supply is still constrained, and at these kind of growth levels, when the market is saying we are not receiving anything, it really shows something's up. Exporters are shying away from that market.
Yeah, I think so, because OK had some analysts actually question them as to what kind of percentage of foreign imports do they have on their shelves. but then they did give some sort of explanation of some of their what you call it, suppliers being the ones who actually import, and then they don't have to count that importation as an import for them. So with that being said, I think they also are suffering like as much as most of the players on the forex market, because if they cannot give us a clear indication of how the forex market has helped them to keep their shelves pretty much filled, we wouldn't be very much having such movement on the forex market.
Yeah, I think I agree. In terms of where we're going, I think it's still a long way. But obviously, we have to endure the volatility. It remains to be seen whether fundamentals are as correct as what the government says. They feel that the rate should be closing and it should come off to about between 3 and 4. And obviously, such volatilities they're expected when the market liberalizes. In Egypt, the rate at a time when it was liberalized, it was at around 7, it went to 16, and it came back down to about 9 thereabout. I think it's also a matter of how fundamentals are positioned. If your fundamentals are okay over the longer term, the market clears. But in terms of Zimbabwe, I think it's really quite tricky. Why? Because authorities are in a fix. They do not have a bailout, which obviously Egypt enjoyed in the year in 2016 when they liberalized. In terms of Zimbabwe, we might have to continue to resorting to borrowing from the local market, and that has got a money supply inducement effect. And when money supply goes up, we all know what happens. It's inflation which obviously rises. And when inflation rises, it means prices are up and there is more suffering on the economy, and government also have to readjust its own books. So that really puts us in a worse off position. So it remains to be seen.
All right, thank you, Respect. The parallel market keeps running away at a high of 8.4 by the close of day. We are yet to see where the market is going. From me and the Equity Access team and Respect, good evening.